Hello. Welcome to Future Financiers, the JA Stock Market Competition for high school students. These online lessons will help give you some information and some background on what is a stock, why do companies sell stock, as well as some ideas and tips and strategies for playing the live stock market competition. I'd like to go through a couple of the screens with you. As a JA student, you can log into this site at any time. You can go to www.futurefinanciers.com and select any of the lessons. For example, background lessons, background information, which includes what is a stock, buying and selling stock, which will take you through a sample of how a person acts as the buyer, the seller, and the broker. There's also information on reading a stock tables, and then some information on what to expect from the actual live event. For example, what we're trying to create is a feeling that you're like in the New York Stock Exchange at the peak of the activity. It's going to be very noisy, very crowded, and chaotic. And it's important never to underestimate how noisy it's going to be. Sometimes you might actually be shouting to your team members. So some professional traders have actually developed hand signals and things. The other thing that we want to make sure of is that you understand that at the actual live event, there could be up to 150 teams with 4 or 5 students to a team, and that you will be standing for several hours. So we want to make sure that you dress for success, but wear comfortable shoes so that you won't be worried about your feet hurting while you're trying to make decisions. In the actual game, you will get $1 million fake dollars to invest. You will have 60 seconds to make a trade, and there'll be 60 days of trading. With 150 student teams, there is approximately 1 trader for every 5 teams. So that you will have to make sure that you know where the traders are in your area, because you want to be able to get to that trader as quickly as possible. Okay, so what I think is really great is we do have an idea here on tips and strategies in general. And one of the tips, most important tips, is to keep your money in play in the market. Okay, having all cash on hand is going to leave you with $1 million if you don't invest it. However, it is not going to win the game. And the object of the live activity, the live competition, is actually to amass the largest portfolio within the 60 days of trading. And we have trophies for first, second, and third place. It's always important to know what stock you've owned because you're trading, buying and selling. I will give you a hint that in all of the years that we've done this activity, and it's been done across the country, the most successful teams trade only 10 or 12 times during the actual 60 days of trading. So you don't have to trade every day in order to be success. You always have to know how much cash you have on hand, and you can do that by checking your portfolio. There are 2 ways you can check your portfolio. You can have a smartphone with you that has a QR reader app on it, and you can there will be a QR code on the back of your table tent name with your team name on it, and you can scan that QR code and have access to your portfolio. That is available at any time during the event. The other way to do it is to there will be 5 tickets on each table for each team, and you can go to a print station. There are 4 strategically placed around the event, and you can give the volunteers at the print station your team name team number, and they will pull up your portfolio and print it out for you. Okay, another thing that you need to know is you have to be able to watch for the trades, the news, and stocks that are going by. A very important thing to know is that there is a commission that you pay once you actually get to the event. Okay, and you have to pay it on every transaction. For example, if you have $100,000 and you want to buy some stock that's $50 a share, you cannot actually buy 2,000 shares because you don't have enough money. You have to pay 1.25% commission on every trade that you make, whether you buy or sell. Okay. The other thing is, don't panic if your stock goes up or goes down. Okay, so it's just like life. You know, we have good days, we have bad days, we have good days, a couple good days in a row, a couple bad days. So be aware of what your stock is doing. If you see it constantly on a downward trend, that would be a really good idea to get rid of or sell that stock. However, you can hold the stock, and good things will happen, bad things will happen, but you just have to make sure that you're watching it and don't let the bad things happen for too long. Okay, if a stock is underperforming, it also can cost you the time because there's only so many turns, and every minute that's waiting for the stock to turn is a minute less that you could be investing. And have an exit strategy. Know how much you're willing to lose before you want to sell your stock. Okay? On placing the transactions, like we said, there'll be volunteer traders there. They'll have visors on, and they'll have tablets that they will record your sales and your trades on. So you have to get in front of the trader to get his or her attention. There will be little pieces of paper on each table. It'll have the name of the space to put your team number. It'll have a space to put the stock symbol that you want, whether you're buying, selling, buy all, sell all, and whether it's dollars or shares that you're going to use. And then it also has another place on it for a stop loss, and we'll get into that at a later time. You have to have them know the stock by the three numbers, not the three-letter symbols, not by the company name, because that's what the screen will be that the trader is pulling down. You can give them the best way to do it is say, I want to buy, I want to sell, I want to buy all, I want to sell all, ABC stock, buy 2,000 shares. Give your sell orders first, because if you want to purchase a stock, you might not have enough in your portfolio if you say buy something first before you sell off something else. Okay, and try to do it in even amounts, not selling 1,001 shares. The next strategy is you have to be prepared. Okay, the most important thing about the success of the team is working together. So you're going to be, hopefully you've had time to talk with your team members and decide who should have what roles. One very important thing is conflict within a team. For example, there's been teams that we've had where the people have just stopped talking to each other, or they're arguing. Some are saying buy, some are saying sell. 1 minute goes by, 2 minutes go by, and by then the news has gone. They've lost an opportunity. So you really need to know when you set up your team who is going to be the person that when there is a disconnect within the team and a disagreement, that person will be the one to make the final decision, and everybody will have agreed on it beforehand. It can really be costly because if 3 minutes go by and the stock was at $7, you could have lost $30,000 while your team was arguing. Okay? So at one event, a team was arguing whether they should sell the stock. They lost over $100,000 in value, and at the closing bell, they were in fourth place, missing the third place by only $46,000. So because they were having an argument, they actually missed out on third place. So one of the things that are key is delegating and accountability. Here are some different roles and the kind of person that you would like to pick on your team to cover that role. The asset manager, okay, the asset manager actually says things, understands how much cash they have on hand, what stock do they own, how many shares do they owe of them, and this person is really the most organized person on your team. They're able to track things, they have good math skills, they can calculate ideas and calculate the costs. For example, a team owning 5,000 shares at $20 would have an exposure of $100,000. So this is your detailed person. Then you have your market analyst. Okay, this is the person that tracks all of the news. And remember, you're looking at 3 large screens. The one screen will have a list of all the teams and the team standings and what their stock portfolio is worth. Another screen will have a list of all the stocks. It'll show their high, their low, their current selling price. If things are going well, the price will be in the green. If things are going down and it's a low point, the stock will be in red. So your market analyst is able to take all of this information, including the graphs in another area, on another screen. This person really is your video gamer person, the person who can play games like the games where it requires team play. You might be coming at an enemy and you've got a group of you and you're hunting dragons or something. And so this person can take a lot of visual information in at one time and process it quickly and accurately. So this is the person that you want to be your market analyst. They can multitask, they have a good sense, they have a great memory because they've got to be able to watch what's going on and then be able to tell the team something news. For instance, as a news brief goes across the bottom of the screen, or a hot tip that says there's a freeze in Florida and the orange crop is severely damaged. If your team owns stock in an orange juice company or a bottling company that sells bottles to an orange juice producer, you might want to consider selling the stock. But if you don't have a person that's watching this information go by and gathering that for you and communicating it, then you're going to have a hard time. The portfolio manager. This person is your most analytical person and very decisive. Okay, this is the person who, when there's a conflict in the team, some people are saying buy, some people are saying sell. This person, the portfolio manager, will be the one that should have the final word, because they're the ones that can make a decision when everything is going crazy and it gets very busy at the stock market, gets very hectic. People are buying and selling, they're hollering for traders, you're watching the screen go by. You need a person that can hold it together and say, okay, here's what we've got, here's where we're at, this is what we need to do. Another person that you need is, we'll call it your trade execution specialist. This is the person who goes and tells the trader what you want to do. Okay, it's not easy because traders are surrounded by other team players, and everybody's trying to get the trader's attention. So the trader has to be able to have the order. They have to know what they're supposed to do and be a good communicator. Okay, because they want to be able to tell the trader what they're actually going to do. I'm going to buy 3,000 shares of ABC stock. We're team 22. And then sell all of stock XYZ. Okay, the person must be assertive. You don't want a person that's got a tiny voice going, trader, trader, because they're not going to be heard above all the other people hollering for the trader or above all the noise in the room in general. You want a person who can be loud. So this is probably the loudest person in your group, and be able to be in a crowd and be assertive in that, not letting people cut in front of them and things. No body slamming or body checks, please. But definitely be able to take a stand and make sure that they're not getting walked over. They also have to have a clear, loud voice because they have to be able to make the trader understand what they want. Another hint that we find that might help you is that we do have 2 breaks. There are 2 breaks during the event. And while it's a good time to maybe take a trip to the restroom or take a breather, get some water, it's also a good time to check in with your teammates. Send you might be doing the QR codes to get your portfolios, but it might be helpful to send somebody over to get a printout of the most updated portfolio. It might be time where people want to switch roles. There's another person that would really like to be the trade execution person. Or if your team isn't doing well, take a look. Do you have the right people in the right jobs? This is where you can take time to assess where you are and make a new strategy if you need one. The final thought is you're likely to be shouting at your teammates. So if you can come up with some hand signals, body gestures, thumbs up, nodding heads, then you can quickly decide, thumbs up, should we buy this? Instead of everybody yelling, you can give a thumbs up. The trader execution specialist can go and make the trade. Now there are several things that I want to point out. In your stock listings, and there will be a listing of all the stocks on the tables when you get there. Couple of the stock you might see will have a dividends, and a dividend is when stocks, a company wants to have a share of their profits. For instance, they had a $3 million profit. They have 1 million shareholders, so they decide to share that profit with the million shareholders, so everybody would get $3 a share. A person that owns 1,000 shares would get $3,000, and a person that owned 5,000 shares would get $15,000. Okay, the key to the dividends is looking at the dividend dates. Okay, and these will be in your stock listings. There's the declaration date. That's the date the company announces that it's going to pay a dividend. If it announces for $3, okay, it'll say we're going to do $3 on February 14th. There's also the ex-dividend date and the payment date. Okay, the ex-dividend date is the day in which the purchasers of the shares are not entitled to have a dividend. So if they have an ex-dividend date of, for instance, February 15th, okay, then they're going to pay out, the payment date would be February 22nd. So you have to own, if you want to own a stock that's going to pay a dividend, you have to own that stock before February 15th. So we'll give you an example. February 2nd, XYZ announces they're going to do $2 a share dividend with an ex-dividend of February 9th and a payment date of February 14th. So Adam owns 1,000 shares. He keeps them, and on February 14th, he gets $2,000. Brianna buys 500 shares on February 5th. She keeps her shares, and on February 14th, she gets $1,000. Chelsea, another person, buys 2,000 shares on February 8th, sells them on February 9th. But she owned the shares before February 9th, the ex-dividend date. Okay? She owned them on February 8th. So that on February 14th, she gets a dividend of $4,000. However, David bought his stock, his 1,000 shares, on February 9th, the ex-dividend date, okay? Because he did not own it before the ex-dividend date, he does not receive a dividend. So you want to make sure that you're watching the ex-dividend date, okay? Whether the dividend is scheduled or fixed, be sure to note the per share dividend as well as the dates, okay? And as a hint, the stocks which are scheduled to pay a dividend will have a letter D next to their price on the stock listings. Another opportunity thing that you might like to take a look at is something called the stop loss orders. And investors purchase stock with the expectation that they'll rise. When reality fails to meet their expectations, they lose money, they're forced to sell it. Okay. So what a stop loss does is offers protection by limiting how much you can lose on an investment. It's a protection for the investor. As a team, you can put a stop loss on any stock in the portfolio for any amount that's below the current selling price. As long as the stock remains above the stop loss amount, the stock remains in the portfolio. However, when it starts to fall and it falls below your stop loss price, then the stock will automatically be sold without your trade execution specialist having to go find a trader and make the sale. Okay, it's a defensive strategy designed to specify how much loss you'll take. Okay, for instance, a team purchases 10,000 shares of ABC, American Beverage Corp, at $20, and they put a stop loss at 15. Okay, as long as the stock stays above 15, the stock will still be in the team's portfolio. So some turns go by, the stock is moving between $20 and $30, but then it begins to fall. At turn 21, it drops below 15, and the stock is sold without the team needing to issue a sell order. There is a commission when a sale is made from a stop loss. It doesn't cost you anything to put the stop loss on. It does cost you when the actual trade goes through. It's not absolute because, for instance, a stock opens on day 21 at $16. And you put a stop at 15, and so you hasn't sold yet. But at the end on day 22, it opens at $13. The price is below the 15, so your stock will be sold. Okay, and you still lost money, but you didn't have to go find the trader to make the trade. There is another opportunity to use stop loss. Say you went back and you bought the ABC stock for $15, and you saw it. It was climbing to 20. It climbed to 30, and you said, "Well, I don't. Our stop loss is at 15." However, you think, I can raise my stop loss. I can go back to the trader and ask for the stop loss to be put in at 25. So that way, I bought it at 15. I'm going to sell it before it goes back down to, it's now at 30. I'm going to sell it automatically if it goes below 25. So that way, you've made yourself a cushion. You haven't lost everything between 15 and 30. You've only taken a chance that you're going to keep what is between 15 and 25. So you've kept yourself a $10 per share cushion in case it goes down. So other opportunities in this lessons are you can take a look at what really happens, a reality check. Because this is a simulation, the idea behind Future Financiers and the JA stock market is that the principles are true with the stock market. However, it's exaggerated because we've sped up the time. And there's margins, there's short selling, and if something seems like it's going to be too good to be true, this is like an explanation of what might have happened with Bernie Madoff when he defrauded investors of billions of dollars. There's also things you can learn more about stocks if you'd like to learn what short selling is or stock splits. So what you want to remember is that you really need to make sure you pick your team and give roles to the people within your team that fit their personality and their strengths. You've got your math person, you've got your dedicated person, you've got your person that's attention to detail, You've got your loudmouth, who's your trader, execution specialist. You've got your market analyst that's really good at taking in visual details, like a gamer, and that although you have 60 days to trade, the most successful teams trade between 10 and 12 times. So you can have a stock and hold on to it. Another note is when you're looking at your stock tables, you're going to recognize some companies that are familiar to you. Mass Mutual, Savage Arms, Chicopee Savings Bank, United Bank, Belize, all local companies who have sponsored teams and that to high schools teams to be able to play, and student teams, they as part of our way to thank them, they get their business listed as one of the stocks to trade. And these stocks can go up and down. However, they're good, solid stocks. Okay, they're not going to fluctuate like a pretend stock does in this game. So if you want something solid, you're going to go with a well-known company. However, there might be a made-up company like Orange that makes special cell phones or tablets, and that stock is might sound familiar, but it's not a local company. Or Zoogle instead of Google, or Trans World Airlines instead of American Airlines. So they're made-up companies, and those stocks can go very high. They can also go very low. So those are the ones that you are going to take more of a risk when you're investing. So we hope you have a great time. We hope you use this site. Remember, you can log into it anytime without a username or password and go over some of these tips again at your convenience. Thank you very much.